Hello, everybody. Welcome to another weekly market news. Today is Monday, 7th of December, and last week on the stock markets was rather positive. If you look at the chart of S&P 500 or other U.S. stock indices, it was more or less positive. In Europe, we were able to see some kind of a correction. If you look at the 4-hour time frame, we can see that stocks were surging. More or less. We are right now near the record highs that were reached on Friday, and stocks just simply don't have that much space to go any further. So we are waiting for another stimulus, something that will be the new catalyst of some more moves on stock markets. At the beginning of this week, Brexit is quite trending, so we are going to talk about that. But right now, we can see that stock markets has begun the new week with some losses, which is mainly driven by the Brexit news and also by the fact that we have reached another record highs in the US. If you look at the chart of EURUSD, that was also quite interesting last week because we have reached 120, then 121, and we have came very close to 122, but as you can see, the ending of the last week and the beginning of this week was also followed by some correction and surging on US dollar. US dollar has touched the lowest level in 2.5 years, so it's a bit undervalued maybe at this time. So that's why investors right now are looking for corrections, and the correction might begin just as the beginning of this week, and we can maybe go through this correction throughout the rest of the week and maybe the rest of the year, because as we can see right now, the coronavirus cases in the US are surging rapidly. We have record highs in hospitalizations, in total deaths, and also in overall cases. You can see this is just California. California is right now thinking about any more restrictions that can come in place, which will obviously affect the overall recovery of the economy. This is U.S. total, so I'm going to find the chart. Here you can see the daily new cases. They have reached a new peak just last week. Obviously, the weekend there is a lower testing rate, so we will have to wait for another numbers in the next days. So that's what's happening in the U.S. and obviously can bring another correction to stock markets. So it might be very likely, but at the same time, the Fed meeting hasn't been scheduled, or it hasn't gone yet. So we will have to wait and see what Fed will decide about the further of the stimulus. Obviously, the euro and the ECB will also take place until the end of this month. So you can see 121 is being held by buyers, so we probably might see some further correction to the upside and holding the trend. Like I said, I was talking about Brexit at the beginning of this week. What happened there was that the talks were obviously throughout the weekend, and we did not see any result that would please the investors, obviously, and still the main issues like about fishing and other things are still being unsolved. So this is a big uncertainty for the markets, and obviously the source of some correction here at the beginning of this week. So GBP is falling rapidly, about 1%. Other markets have also joined this rally at the beginning of this week, and you can see the US dollar on a daily time frame on USD CAD is surging also on another pair. So USD CAD, USD JPY also surging. So US dollar is going to some correction here. We can see the lines here, the interesting support and resistance line right here on 104.39 is a strong resistance where the markets will probably stop. We also haven't hold this strong pullback to this trend line, so this also can mean that the market can go a little further, retrace from here, and then we'll probably have to wait for another fundamentals for this week. So USD CAD is looking like that. Gold was quite interesting also last week because we have seen last month huge lump and only few days into the new month, and we can see on 4-hour time frame a huge surge on gold, which took advantage of the stimulus talks in the U.S. and also the falling dollar. So gold was able to rise back above 1800. 1800. Now we consolidate just below the important resistance line. So we'll have to see how it plays out. But it looks like gold might go sideways. Also with the surging dollar at the beginning of this week, we can see the gold just doesn't have enough power to go any further above these strong resistance line. Also the vaccine news are quite positive as UK has approved Pfizer's vaccine and can start delivering by the end of the year, which obviously for the expectation of investors is extremely positive and can reflect in fall of gold and other safe haven assets like US dollar, for instance. So this can also be quite interesting to see. About the market front, the economic data last week, the only interesting day was obviously Friday, and we are going to look at just that. On Friday last week, there was there was a release of data from U.S. job market. We can also look at the PMIs from Eurozone countries. So U.S. Services, so we can look at composite PMI is just below 52 points. French PMI is well below 50. 50 is an expansion in the sector and in the economy overall. So services is below 40 points. So this is very bad for France and for the outlook and bounce back for the economy. Spain and the most interesting might be Germany. So that's below 50, 52, and this service sector, which is obviously the engine, the economy, is below 50. So probably we would see contraction on of the GDP in the fourth quarter for these European countries. And like I said, Friday U.S. job data, non-farm payrolls, the NFPs rose just by 245,000, which is a solid number, but it's well below previous number, which was around 400, 500. I don't know if these numbers are accurate. Was about 500, so it was much less than what was anticipated and also what happened last month. The unemployment rate came up better than expected, was 6.7%. It was a fall from 6.9, which is indicating to a much slower pace of hiring and much slower pace of recovery for the job market in the U.S. So that's that might get quite disappointing because we can see the last month was 1% drop, and this month was just 0.2% drop. So the job market is slowing, and it might not be very well news for the economy and for Jerome Powell and U.S. government, which is right now taking time with the fiscal stimulus. So that's the S&P 500. Like I said, we're expecting some major movements if the situation of Euro USD is changing, and also the ECB. Matter of fact, let's look at the economic calendar this week. On Monday, we do not expect anything quite interesting, but on Tuesday, there is GDP from Eurozone and an employment change in Euro. Also, there is some secondary data from US. Um, on Wednesday, there's a DOC meeting and the interest rate decisions with some stocks change of oil in the US. On Thursday, there is a beginning of the summit, which can be key for future of Brexit. So this would be something that you should also watch out for. The rest of the week, there's an ECB, like I said, on Thursday. So DAX and other European indices can very well bounce from that. So we'll have to monitor how the thing goes with the pandemic and surging cases in Germany, but it can be a source of some growth. There is a CPI number in US. We do not expect anything from this, so at this point, it's a secondary data because Fed is not going to do anything about this anyway. There's some jobless claims from US. And for the rest of the day, nothing. But on Friday, we don't expect anything from US as well. Customer sentiment, customer expectation. This might be quite interesting, but probably will not affect the market at some strength. So that will be for today's video. Hope you guys enjoyed. If you have any comments, leave it down in the comment section below the video. And I will see you next week.